What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 28th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I not only want to talk about the continued growth and volatility for cryptocurrency markets in the short term as we approach the upcoming halving event in May of 2020, but along with that, I want to spend some time to talk about the continued growth and fear due to the coronavirus in traditional equity markets as we're set to open to new lows in the next couple of hours. And also talk about how we recently on the newsletter talked about how this could very well happen. All right, so we've got a lot of information to talk about, guys, but real quick, I want to let you all know that this video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform that allows you to interact with a wide range of traders from across the world, and they just recently launched for US traders their copy trader feature that allows you to copy alongside a variety of well-known traders in the cryptocurrency space, including people like myself as well. So basically what you have to do is you go to the profile of any individual trader, you can view their stats of their performance on a monthly basis, their current portfolio holdings, as well as the chart of their performance. And if you want to go ahead and start copying them, you simply click the blue copy trader button and you'll trade alongside them real time at the exact same prices. So check out the link down below in the description if that interests you. All right. Now I want to go ahead and talk a little bit about crypto markets. We certainly, I think in the sense of altcoins, have had a bit of a rebound here in most of our key plays here. If we take a look at the last 24 hours, you look at it as basically Bitcoin, Ethereum, and XRP being relatively stagnant. The top three plays not doing much. But if you're in the certain small caps and mid caps, many of which we've talked about here on the channel, and there's some as well that we haven't, you'll see that there's a little bit of a different story here. Kyber Network rebounding on practically all of its losses, going back up to its previous highs, back up about 10%, MakerDAO 8%, and Chainlink up 6.6%. There's a few other plays here that are doing well as well. For example, Dash, one of our other top 10 plays for the year. But notice these three plays here almost leading in the top 5. We've got Kyber, Maker, and Chainlink. All of these are either Ethereum enterprise plays or DeFi plays. I want to make it very clear. These are things that we've not only talked about here on the channel, but these are the plays that we're looking forward to going into 2020 and 2021. We want to look for these plays that are really shaking up the game in not only the DeFi space, but also fixing major issues on the Ethereum network. Those are really the two big labels that I'm looking for this year: actual enterprise adoption of Ethereum and smart contracts, and applications not only that are going to help that, but also applications or projects in the cryptocurrency space that are going to help provide liquidity or decentralized exchange services. Now, I think it's very important to understand that these are the key terms we have to have our focus on over the coming months. But I digress. I've talked a lot about DeFi. I want to go ahead and just share with you all real quick an interesting chart that I saw to kind of kick off our discussion of Bitcoin as we do step into the halving event here in May of 2020. We have to think about, where's price going here over the next couple of weeks into the month of May. And I think there's a lot of really good predictions out there, but with the recent pullback here, there's actually been a really awesome proposition, and I have no doubt they're probably not the only one who's put this out there, but Excavo, who's one of the most well-known and long-term traders on the TradingView platform, actually put out what I think is a very reasonable prediction. And this is a cup and handle formation going into the halving event. Now, for those of you out there who don't do much technical analysis or charting, to put it simple, a cup and handle is a bullish pattern. It's basically when you have a specific high in price here, you come down and you start almost a cupping formation where you have a consistent range where lows right along, and then a consistent high with the previous high that was set with a pullback in price. So similar to a bull flag where you have a breakout and a pullback, what you have with a cup and handle is basically a cup back upwards, back up to the previous level of resistance, and a pullback that still sets a higher low from some of the major previous significant lows on the cup in that case. And this is the handle, so that's where the name comes from. And then what happens after a cup and handle is you get a base level of support, and then we move up towards higher levels, higher resistance level than previously tested. The reason I like this for two reasons is it's taking into factor a good set of price action here for the last couple of months since back in October. But along with that as well, this is also taking us to our target range of around 12,000 in some time between April to May. And this is something that I've talked about on the channel previously over the last couple of days. And that's the idea that, I really do believe that 12,000 is going to be our target before the halving event. The little bit of the precursor run that we get, at least we got last time before the halving, sometime about a month or two before the actual halving event. I think we're going to get something similar to that. And then afterwards, we're going to probably have a little bit of a pullback. And the way that I think it's going to play out, again, is, as it shows in that chart, we're going to get a cup formation here. So we have the cup, we have the handle, and the handle is going to break out here, and we're going to test somewhere around 11,500, maybe up to 12,000 if markets get really crazy. Either way, up to the upper band of this line of resistance. And then we'll come back down, probably testing support sometime after the halving, maybe go down to 9,500. And then as the halving event slowly starts to have a clear effect on supply and demand economics for Bitcoin. When the demand is staying relatively the same and supply instantly gets cut, we're going to see on a multi-day basis, again, that supply shock hit Bitcoin's market. And slowly but surely, we're going to start to have more demand start to build up and build up as price picks up, and the supply is not going to come up to meet it. That's the thing, though, guys. The halving event is going to make it so over the next 4 years, we're getting half as much Bitcoin as we used to get. So if price is maintaining the same, this is going to be a very difficult market for buyers, right? Prices are going to start going up, premiums are going to be set in, and people are going to have to start paying a little bit more if they want to get a piece of Bitcoin. It's just basic economics, guys. The only thing that you could make as an argument is that if demand falls off the face of the earth and gets cut in half, that would mean prices relatively would stay the same for the next year. But that's not what's happening, guys. We've been seeing the HODL waves are growing. People are holding Bitcoin at very high levels right now, and they're growing their stakes here where they're not moving for over a year. So again, it shows us here that there's a good set of growth here, and the supply cut coming in, it gives us a basic, simple economic equation in this case for Bitcoin. So again, guys, don't worry about the short term here. We're coming into the coil of a very long-term wedge. We've got this big event coming up. If you're understanding these things and your time frames are focused on the next broader cycle, don't stress about markets, guys. It's the biggest point I could drive home. I know I've talked about it a lot. I'm probably beating a dead horse at this point, and I don't want to beat a dead horse. I want to let that horse rest. But at the same time, look, at the end of the day, guys, the key point here is to understand these big fundamental principles, right? And understanding, looking at TA patterns that, talk on a multi-month basis, I think is, if anything, where you guys should be putting your focus. Don't worry about the day-to-day time frames. Don't worry about the hourlies. It's too stressful. Now, speaking about something that might be a little bit stressful, we obviously have the continued scare with the coronavirus, okay? Now, this has been continuing to grow and develop over the last couple of days. There's been more cases throughout the United States. I don't want to spend too much time diving excessively in the data. In my next video, we'll talk about that a week out. I think that's going to be about a time when we'll see whether or not, similar to in China, how bad this really gets as we start to spread across the globe. I know that some of you have probably brought up the point now that we're getting to a point where there are more new cases on a daily basis outside of China and other countries across the world. But it's kind of, at this point, it's kind of expected because, you do have a much more countries and a much larger global population simply outside of China, right? And it's going to be a bit more difficult to contain this outside of just one country. And not to mention a country that, as interconnected as China is, a country that was able to take a lot of preeminent measures very, very quickly, right? A lot of very, very over-the-top measures. Whereas here in the United States, or maybe in other countries throughout the EU and Asia, story might be a little bit different. So I will give that case to people who are a little bit concerned about the coronavirus. It will be interesting to see how markets actually go about, it's not just markets, but federal governments and health agencies go about trying to suppress this and trying to find that balance of not freezing the global economy, but at the same time being able to censor the growth of this continually spread virus. But long story short, no matter what does happen over the next few weeks, guys, markets are still feeling the pain. Specifically, Russia's been leading the way, nearly down yet again, another 4.75%. We can see here a lot of Asian and EU indices here, as well as India down nearly 3.5%. And the China A50 going back down again. FTSE 100 down 3.15%. Japanese index topics here down 2.78%. German index 2.4%. The tech DAX. And then you can go down to the U.S. indices where they're not fretting as bad as others. But as we've started to get the spread here in the United States, we can see the small cap almost down a percentage. The S&P 500, Dow Jones, and NASDAQ all over 1.3 to 1.5% down. Now, I want to go ahead and talk a little bit about the price here. All right, this has been the performance over the last 6 days of market price action, over 13.18% down. Now, I want to be very clear, guys. We have seen this before in the past. This is not unheard of territory in the sense of percentage decline. That is the way you should be looking at this. I could say, you know, oh, we've had the biggest point drop in a week in the NASDAQ or the Dow Jones or the S&P 500, but not to be biased, guys. Points don't really matter. Points do matter to a degree, but it's a matter of percentage decline, right? I think we talked a little bit about this in the last episode, but it's just a point to emphasize here. A lot of people will be way too doomsdayish and say, oh, this is the biggest crash we've ever had. Not really, right? Basically, this is pulling back on basically the last 3 months of price action from back in December, right? So that's a fair way of looking at it. We've cleared out 3 months worth of gains in the market in one of the record years for the S&P 500 and the NASDAQ in a matter of 6 days, which is not a good sign, right? And we've seen this before. There's actually a very similar time period. We've not only had the correction back here in 2018, where we actually had a pretty decent pullback as central banks were slow to react with monetary policy. But along with that as well, back here, one of the craziest and hectic periods for me when I was trading was back here in August of 2015 when we had a flash crash down over I think it was around 8% overnight, as there was fears of a recession spawning in China and emerging markets. And this happened over a 25-day basis. So to put some perspective, I think what we're seeing is a little bit more severe because unlike back here where we had multiple days of lower highs and lower lows on a relatively consistent downtrend and then the sell-off at 18%. What we're seeing is just a stark sell-off here, a near absolute shock in prices here on equities, where equity valuations were riding pretty high throughout most of the scare here in January and February for the coronavirus. So I think markets have a lot of way to catch up here, guys. The significance here, again, just on where my view stands, I hold a pretty confident stance that this is going to spark some form of major slowdown in the economy, even if central banks intervene to some degree. Because this is putting an absolute shutdown on a lot of travel, on a lot of supply chain activities, and also a lot of leisure, right? Where people are spending money for, you know, cruise ships and traveling on vacation. A lot of those plans are being shut. I know a lot of the cryptocurrency conferences have gone stagnant, guys. So anyways, just a point here to take into mind here. I think this is very interesting to say, to look at. And I don't want to sit here and say that we've predicted anything close to this kind of correction happening so soon, right? But I want to talk about something that I did actually write, and you guys are going to see it at a pretty equitable time with those who get the newsletter. I actually put this chart out as one of my top 3 kind of things to watch in equity markets, and it's a chart of the VIX. Now, I want to go ahead before we, you know, dive into this and explain what this chart is, right? Diving into, you know, what I've basically analyzed on the chart. I want to explain what the VIX is. For those of you who may not know, the VIX is the volatility index for the S&P 500. And basically speaking, it measures the volatility or the spread of price, in this case, in a period of time for S&P 500 options, in this case, call and put options. So as we get more spread and uncertainty in these options, wider spreads, in this case, you're getting more volatility, and therefore the VIX is going to move up. So when the VIX moves up, it can sometimes mean good news for equities. Like, for example, during the dot-com bubble back in the 90s, the VIX was increasing and stocks were going up. But in most cases, when the VIX increases, it's usually a sign that markets are selling off, right? So for a long period of time, the VIX here had actually been pretty stagnant here, right? We had a few little outbursts here, but nothing like what we've seen now. And what we actually were seeing, much like a stock, is a technical pattern building. And that was basically a wedge building, right? So we had this wedge here of these rising lows here showing increased uncertainty in markets. This is how you should read the VIX. If you're seeing the VIX reach higher and higher levels for the kind of support range here, and we're not setting new lows, in this case, it's showcasing that markets are getting less and less confident because, again, there's that volatility. There's a difficulty of discovering price in markets where people start to get uncertain about the kind of the current standard, or not standard, the current status of financial markets, right? Maybe that markets are overextended, and we don't know if these are actually fundamental values for these tech companies and all the things that are leading the market forward, right? That's what this is telling us in a very simple way, without overcomplicating it. And then along with that as well, we also had a squeeze on the resistance range, right? We weren't getting any dramatic pullback or correction. So what happens is this sets a coil here where eventually this thing's gonna probably pop, right? And what I mean by that is, yeah, it could falter over, but in most cases, it's going to spike upward. And I had this literally drawn back a couple of days ago before we even had any pullback in the market. But it looks like we're getting it a little bit early. I was expecting something in possibly April or May. But again, as I wrote here, we needed to keep an eye on the VIX here. We needed to watch out for this breakout. In this case, boy, have we gotten it. I mean, we got a major gap up here with the move downward that we got here. I'll certainly pull up the NASDAQ back here on February 25th. So it's changing everything, guys. And if we take a look here on the monthly, I want to go ahead and take off our drawings. Right? This is where we're at in the VIX. This is back here during the start of 2008. Right? This could be another simple volatile spike like we saw back here, or it could be shaping up for something much worse. You get past this range at 48 points, coronavirus is going to be making a case that it's sparking for a full-scale recession. How fast it comes, I don't know, guys. We'll have to see. Right? This is a monthly chart here. We might have a couple of months until things get really bad. It might be that, you know, we hold at this range we're at for a little while, trace up a little bit higher, maybe set some higher lows, and then we keep pulling back like we do in most recessions. Who knows, right? All I know is I'm positioned where I'm positioned, right? And if you guys have positions in equities, there's nothing wrong with that, right? You guys have to determine for yourself what you want to be positioned in. But for me personally, I'm in Bitcoin, I'm in cryptocurrencies in general, and the next thing I'm looking to add to outside of the little bit of physical that I own is some positions in gold to silver. And I know in that case I'd like to own physical for a good bulk of it, but also paper investments aren't the worst in that case. But I would recommend making sure that, you know, whatever you're owning, it's actually backed by the physical precious metal in this case. So anyways, that's it for the video, guys. I'm going actually on a trip here over the next couple of days. First time in a pretty long time I've done any traveling. I'm not leaving the U.S. or anything, but just going up to a few different cities and stuff to go do a little bit of traveling. So I'm excited for that. But again, if you guys have anything you want to say in the sense of the topics that we talked about, please feel free to leave a comment down below. If you like this video, drop a like. And again, as always, there's tons of ways where you guys can support the channel, from our newsletter to also just making a donation to the channel if you like the content, or using the Brave browser and things of that sort. But until the next video, guys, I hope you all have a fantastic weekend wherever you are. Stay safe out there. Take it easy. Don't stress about the charts too much. And I'll see you guys in the next video. Stay tuned.